my window.
Hello traders, Gary Wagner with the Gold Forecast here. Tuesday, 3rd day of May, approximately 11:30 in Honolulu, Hawaii, and this is the Daily Report. We are seeing a continued sell-off in gold. We have gold currently printing at 1536. Forex for the morning session has been closed. The afternoon session is beginning to open up and trade. We talked about the fact yesterday that I absolutely believed that we were now entering this fourth wave, this corrective wave. I believe that we've gotten confirmation of that today. We're looking, of course, at our daily chart with Elliott Wave. I have really condensed it so you can really get a feel or a sense for how this market has moved and where it is trading. Of course, if we take a look at this marketplace itself, you have 1 to 2 here. These are our major moves. And then from 2 to 3 goes here, 3 to 4, and then we are currently in this major fifth. That's the very, very large picture. The next level that we'll take it down to is what's called the intermediate. That's in these blue boxes, and then the minor wave counts you can see are in the kind of magenta or pink. But we are not going to focus on the minor. Rather, I really want to focus on the intermediate. And to do that, I really want to blow this market up, and I want to talk about possible targets and price points, as we did yesterday, to where we think this market might be headed. So traders, really all I have done is I have run a fairly simple Fibonacci retracement. I am doing it from the beginning of this third wave right here up to the top. I actually do want to adjust that a little bit so our targets can be a little bit more precise in terms of the areas that we are looking for it to go. And that looks good to me. And here's what I want you to look at. This 23% retracement level. This is 1532. The next target below that is the 38% level. That's at 1505. Those to me are the two targets that have the highest probability and likelihood of points we want to look at as a possible target for entry again on the long side. Now, when we blow that up, here's what you see. The market, in fact, as it traded higher, it found its top right here. And currently, these are the last 2 trading days on a daily chart. It has gone, it's traded below, but is currently, the current tick is our current close, our open and close, it's in red. So it's actually been able to find a little bit of support just above this line here at 1532. My personal sentiment is that this correction is not over. That's my personal feeling. Now, there is some technical information to the contrary, both in silver and gold. And my belief is if I get in a little bit later, I'm more than happy to buy the breakout, but I don't want to buy it too early. And I'll actually put the silver chart up so you can see what I'm looking at in a little bit. But as you can see, this market has come down and it has formed a base, and what we're looking at right now is whether or not 1532 is going to hold. Because traders, if it does not, my sentiment right now is we're going to be looking at 1505, 1503, somewhere in that area. And at that point, they will have flushed out all what I call the weak players, the new money that's coming in the market, and then the professionals will come and buy those positions as stops get hit. So that's kind of what I'm looking at. Another factor that I find interesting that might be pointing to a bottom is this is a daily chart, but if we convert it to a 240-minute chart, you're going to see something interesting. Let me go ahead and do that. So traders, this is that same daily chart, but I've converted it to a 240-minute chart. The reason being is in terms of a subwave, or actually the smaller count, you can see the top that it hit, and what we see here really is a B, C. And this, of course, would be what's called a flat correction right here because you have those matching lows. Now, does that mean that the market's going to stop and find support here? Quite honestly, it's much, much too early to tell. But I will tell you this. I've gone ahead and put it back into our daily chart. But I will say this. When we consider the moves that we've made, we've had 3 trades that we obtained out of this market. They were all profitable, and they were all based upon this wave 3 here. We captured actually a pretty good percentage of this overall move. I think more importantly, as I've always been a proponent, is that in my belief, the toughest thing is to actually call the tops and bottoms and to be able to effectively get out of the market when the market reverses. And as you can see, we did get out in a timely manner. We got out, I believe, 1544 was our stop, got in at 25. So we had a good profitable trade. We got out, and we see this market now beginning to retrace. Now, as I said, my belief right now is that we will see the market either bottom here, or we will see the market bottom at this next target. In other words, it's going to be 23 or 38%. That's what I'm looking at. Lastly, I want to talk about what we'll call just straight confirmation. In a Kitco article that I did last week, what I talked about was that one of the things that you'll see is you will typically see a cross in the MACD that's going to confirm the fact that we have changed from one wave to the other. Now, as you can see, we certainly do not have that cross yet in this market. This market is simply moving a little bit slower, but if we take a look at silver, you'll notice that we've absolutely seen the MACD cross. And traders, what we are looking at right now is our silver chart that we use for the silver forecast each and every day. On the silver chart, I have been using a really pretty extensive use of the Andrews Pitchfork. It seems to lend very, very well. It gave us some really good early warning indications that, in fact, the market had topped by simply looking at this upper channel line. And you can see that once it crossed over this upper channel line right in here, that seemed to be the top. And when you follow the way the market traded, it goes from the top of the channel to the bottom, and then it starts trading really within the handle and the lower channel, but then it breaks and breaks above. This, of course, is that false breakout, because what you see happen is the market come back into alignment, you get a small retracement, and then again, when that market breaks a second time over, that's when we got this hard cut way down. Now, in terms of what we're looking at, and this is why I'm showing you the chart today, is because you can see that MACD at this point has crossed. That's giving us absolute confirmation, at least in my opinion, that we've now entered that corrective stage, that corrective wave 4. You can see it in silver. My sentiment is that gold is following suit, but it's lagging behind silver. Silver's been the leader in performance on the way up, but it's also, without a doubt, the marketplace that when it comes down is going to come down in percentages to a greater degree. And the one interesting thing is we haven't seen it in the gold yet. I would expect to see it in the next couple of days. But if we get this MACD crossing, it gives us absolute confirmation that we have entered that corrective stage, as you can see here in silver. The other thing you might want to look at for those of you who follow silver but aren't trading it and therefore not subscribers to the silver forecast is that in terms of the target areas I'm looking at there, a pretty critical target area right now is $40.84. That's a 38% level. If the market continues to carry under pressure, it would probably go to the 38% the 50% level, which is $38 per ounce. Just to give you an idea of what targets I'm looking at when I'm looking to re-enter the market. Just as in gold, we want to see how it reacts here because it's at one of those critical points, but it does have the ability to continue on this leg down. You had a tremendous rise up in the market, so for the market to come down and retrace, say 50% of that overall move, doesn't surprise me a bit. Traders, my recommendation is I am recommending that we sit tight. We've had 3 profitable trades in a row in gold. I also believe that there's going to be a phenomenal opportunity for this impulse wave 5. We simply need to weather out the corrective wave 4. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be. that it's strange